Ethereum's been on a pretty wild ride lately, and it seems like it's hit a fork in the road. And of course, everyone's asking the same question. So today, we're going to dig into one analyst's roadmap that tries to chart out exactly what could happen next. After a pretty sharp drop, we've seen a nice little bounce. But the big question, the one that's on everyone's mind, is this the real recovery? Or is this just a temporary break before the next leg down? If you're watching the charts, this is probably the question keeping you on the edge of your seat. So, to try and make sense of all this, we're looking at an analysis that uses a pretty well-known market theory to basically create a roadmap, complete with specific signposts and potential destinations for where Ethereum's price might be headed. Okay, first things first. Let's get our bearings and look at where we are right this second. Ethereum has bounced, yeah, but it's already running into its first big test. The price is kind of stalled out right around 29.54. Now, this isn't just some random number. In the world of technical analysis, this is what's known as the 23.6% Fibonacci retracement level. Think of it as a predictable speed bump, where a rally often hits its first real resistance from sellers. The fact that the price is hesitating right here tells us this roadmap might be onto something. So, what's the whole logic behind this roadmap anyway? Well, it's based on something called the Elliott Wave Theory. The core idea here is that market movements aren't just random chaos. They actually follow these predictable repeating patterns, or waves, that are all driven by the market's mood swings, the back and forth between optimism and pessimism. The analyst who put this together thinks we're in what's called a wave 4 bounce. Okay, that sounds technical, but what does it actually mean in plain English? You see, after a big drop, the market rarely just plummets in a straight line. It usually needs to take a breather, and it bounces back up for a bit to relieve some of that selling pressure. That little bounce, that's your wave 4. According to the theory, this is just a temporary pause in the bigger downtrend, and it's often followed by one last push lower, which they call wave 5. And get this, that bounce itself usually has its own predictable structure. It tends to happen in 3 little steps. First, you get an initial push-up. That's wave A. Then, a little dip. That's your wave B. And then one last move higher to finish the whole pattern. And that's wave C. After that's done, the larger downtrend could kick back in. All right, so let's take this theory and actually apply it. Let's look at the real price levels on this roadmap. Using those same Fibonacci ratios we talked about, we can start to pinpoint the key signposts we need to be watching. According to this analysis, the ideal destination, the main target for this wave 4 bounce, is right around $3,170. This lines up perfectly with another key Fibonacci level, the 38.2% retracement, which is a super common target for these kinds of patterns. And the analyst specifically points this out, calling it an ideal target for this kind of wave, and a place where we should expect some resistance. In other words, circle that number on your chart. It's a major hurdle to watch. So, here's where it gets really interesting. What happens next? From this point, the roadmap basically splits into 2 very different paths, and it all comes down to how the price reacts at these key levels. Okay, path number 1 is the corrective path. This is what happens if the price hits that resistance wall around 3170 and gets rejected, turning back down. That would confirm the whole wave 4 bounce idea and probably lead to a new low. But there's also a bullish path. If the price instead just smashes right through that resistance, well, that could mean the whole theory is off the table, the correction is over, and a powerful new uptrend is just getting started. So let's cut through all the jargon and get to the bottom line. What are the exact price levels you need to have marked on your chart right now? The easiest way to think about this is like there's a floor of support below us and a ceiling of resistance above us. The analyst is basically saying that as long as the price stays above that floor, this bounce is likely going to keep pushing up toward that ceiling. A break of either the floor or the ceiling will probably signal the next big move. And hey, don't expect this to all wrap up by tomorrow. The analyst thinks this entire pattern could take another 1 to 2 weeks to fully play out. So a little patience is key here. So there you have it. A pretty clear technical roadmap with some well-defined levels and 2 potential outcomes. The million-dollar question now is, will the market actually follow the script? Is this corrective bounce going to play out just as expected? Or is Ethereum about to surprise everyone and write a completely different story? The levels are set, now we watch.